Welcome to today's episode of the Simply Financial Podcast. I'm your host, Christopher Calandra. Want to increase your financial IQ with today's discussion, which is going to cover 5 things to watch for out of Washington, what our politicians are up to. There's clearly a lot going on in 2025 with President Trump and his administration being very active. Joining me in the discussion is my good friend and close business ally, Brett DePasquale, part of the team here at Osaic Wealth Management. Brett, are you ready for today's discussion?
I am. Thanks for having me back.
So 5 things to watch for. We probably could have made this 50 things to watch for. There's so much going on, but we condensed it down to what we think is 5 big topics. We'll sort of do a round robin, and if it's okay with you, we'll jump right in.
Yeah, let's do it.
So topic du jour is tariffs. So I'll give my quick skinny on the tariffs for everyone, including you, Brett. I know we've talked about this offline too. It's created a lot of uncertainty in the economy and in the markets, although as of this recording, the markets have rebounded from a shaky start after he announced them back in early April. When I say he, I mean President Trump. So there's a lot of uncertainty. How high will the tariffs be? How low will they be? When will the changes be made? What agreements will be struck and who and when? There's a lot of uncertainty. And we know the markets do not generally like the uncertainty, but they have settled themselves after the early shakiness to the point where, again, as of this recording, the markets are generally up from the announcement. Now, the difficult part about this is there's not much historical precedent for what the president is trying to do, especially in a modern, global, technologically oriented marketplace. And the president is an agent of change, love him or hate him. He's an agent of change. So all of this change going on, it's difficult to model how this is going to look down the line. So it has to be, unfortunately, a bit of a wait and see, which a lot of Americans don't like because change is difficult and uncertainty is not anything anyone really likes. So that's my quick skinny. What do you think about the tariffs as we sit here today, Brett?
Yeah, I think you nailed it with the uncertainty. And I'll just add to the uncertainty. There's a lot of emotionality around the entire topic of tariffs, especially in the stock market. Great example is even back in April, we saw the 14th worst day in stock market history on April 4th. And then just a few days later on the 9th, the third best day in stock market history, all driven because of the tariffs. So as things are announced, whether they have actually been implemented, taken effect, or whether it's just something in the news cycle everybody's watching, it's really swinging the markets. Tariffs have been one of those really big emotional points for people. You're either on one side or the other side or somewhere in between, but the uncertainty is absolutely driving a lot of the volatility in the market recently.
Yeah, I agree. And before we move on, I want to use a sports metaphor. You and I, Brett, we're sports enthusiasts. And I think about this for a lot of the prognosticators you see, the talking heads on TV, or if you read something on the internet, or God forbid, you're getting your news from social media like Twitter or something like that. There's a lot of crazy comments out of there. But a lot of people, especially early on, are predicting exactly what's going to happen with a lot of confidence, misplaced confidence, in my opinion. The sports metaphor is like you put on a game and it's an hour game, like a football game is 60 minutes or a hockey game is 60 minutes. And 5 minutes into the game, you know how the game is going to end based on what you saw and thought 5 minutes in. And if you've watched any sports or played any sports, sometimes what you see in the 5 minutes will play itself out through the entirety of the game. But the majority of time, that is not actually what happens. All kinds of other things occur during the game, adjustments, injuries, unforeseen things. And at the end of the game, the total game looks a lot different than it did in the first 5 minutes. And I think the tariffs are largely like that, we have to see the rest of the game or more of the game before we could draw any strong conclusions. So that's my sports metaphor. What do you think of that?
I like that a lot.
So moving on, the big, beautiful tax bill. President Trump in his first administration, his keynote legislation was tax legislation that did a whole bunch of things. It was a tax simplification bill. It lowered rates, expanded brackets, was generally considered a broad tax cut. Most Americans got a tax cut. Of course, some people don't like the legislation, but it was passed and it had a 10-year cycle and it's coming to conclusion soon. So the Congress, along with the president, are looking to extend that further with some edits. And this is going to be important as we move forward because if it's not renewed, the tax code will change dramatically, and that would mean a tax increase for most Americans. What do you think what do you think about this big, beautiful tax bill as it's been coined by, I believe, Donald Trump himself? What do you think about this?
Yeah, I think it's going to be something pretty creative. The general belief is that the tax cuts will extend in some way, shape, or form. We have to remember that pre Tax Cuts and Jobs Act in 2017, the tax brackets ranged anywhere from 1 to 4% higher. So, do I think that we're going to revert to those? I don't necessarily think so. I do believe that the meat of the entire situation is going to be around the deductions, the standard deduction, the SALT deduction, the any type of business deductions, child tax credits. It's going to be the creativeness that joins around what the current tax rates are now. How much you can put into an IRA, how much you can potentially put into a Roth IRA. So little things around there. It's going to be very interesting. But I think if it's all packaged together, it could be a really good positive in some areas for a lot of Americans.
Yeah, and I think I'll add on that President Trump campaigned on a few ideas that might make its way into the legislation. No tax on tips was one. No tax on Social Security benefits is another. So those are things that might get worked into the legislation. Now, the tricky part about this is politically, is the Republicans have a slim majority in both the House and the Senate. So they do control the levers of power plus having a Republican President Trump in the White House. But it's a slim majority. And the Democrats, I don't think, are going to vote for anything the Republicans put up, which means that the Republicans have to hang together on this, which is not going to be easy because you have CBO, the Congressional Budget Office, is going to score this thing. And I don't really like how they do it. But there's going to be disagreement on spending, on tax cuts, on corporate welfare, on no tax on Social Security. So it's going to be difficult for the leadership in the Congress, the Republican leadership, who, again, I don't think are going to get any votes from the Democrats to kind of put this together. I do believe my prediction, Brett, is at the end of the day, they will hang together and put something forth because if they want to have any chance in the midterms of maintaining their majority, they will need to get this passed, in my opinion. So I think I am optimistic that it'll get passed, but there's a lot of moving parts that'll have to get settled in the meanwhile. I think they're targeting around July 4th to get this to the president. So there's some time, but this is a big economic market issue for this year that we want to watch closely.
Yeah, this is one of those things that's had a lot of controversy around it as well, especially in the beginning of the year. There was some general thought that the administration should have tackled the tax bill before they tackled the tariffs. That didn't happen. It was opposite. And obviously, like you said earlier in the podcast, that we have made up those gains from the tariffs. But at the same time, very important for this bill to get through at some point. The earlier, the better.
Yeah, I agree. So we covered tariffs. We've talked about the big, beautiful tax bill. Let's talk about the next three things are the 10-year treasury, inflation, and recession, which all have on the background of this, maybe not even background, that might not be the best word, but what the Federal Reserve is doing. Let's talk about the 10-year Treasury. It really hasn't moved much over the last 6 months, but it's been kind of volatile. And the 10-year Treasury is important because, for one, the United States has to refinance about $9 trillion of its debt this year. So it has a lot of debt out there. We all know that. About 9 trillion of it, which I think is about a third of the outstanding debt, needs to be refinanced this year, meaning it's coming due and they need to pay back the old owners of the debt and they need to refinance it and get new debt. And getting the Treasury yield down, the 10-year Treasury, which right now is, call it 4.5%, if that could be reduced, which I believe the administration would like to do, that would really help us budget-wise by lowering the interest cost, not just this year, but the next few years. For a while, it went down. For a while, it went up, but it's kind of just stayed in this trading range around 4.5%. What do you think about the 10-year Treasury and what might happen moving forward?
I think it's pretty interesting of the volatility that it's had over the past couple months, like you said. I mean, especially with the stock market decline back in April. I mean, it decreased to the mid to high 3%, so 3.8%. So I mean, that's a
Yes.
pretty big swing from 4.5, even higher than that, down to 3.8 in just a couple days. So I mean, you can see how that's being driven with the market as well. But any decrease in it would obviously be good for the debt refinance, but there's a lot of other factors that take place to make that happen.
And a lot of the US debt is financed by international players, China, Japan, EU, and so on. That's part of the reason why we're able to carry this debt, is because there is demand around the world and has been for a very long time, where countries are willing to invest in US Treasury debt, the debt of the US government, because that's a good place for them to put money for a whole variety of reasons. And there was some fears that with this quote unquote trade war, which I think is uh, too exaggerated a statement. I don't like the war term for trade, but there's been talk that they wouldn't buy our treasuries or they would sell our treasuries. I think that's mostly hogwash, and that the Treasury has maintained an orderly market shows that that is the case, that none of that is materialized. But it also shows, with the Treasury not moving, is fears about this trade chapter, let's call it, that President Trump initiated, that we're going to have a return of inflation, the likes of what we saw in 2021 and 2022. I also think that that's just drama and fear-filled rhetoric. And the Treasury numbers don't show any sign of inflation, and it hasn't over the last couple of months, and even since the announcements of the tariffs in early April. What do you think about that?
Yeah, no, that's a good analysis of it. I think it's also fair to point out that the Treasury also affects consumers in savings rates, mortgage rates. So it has a much more of a impact than we may think that it does.
Yeah, and I touched on inflation. Inflation is the fourth of the five things we wanted to talk about as we watch to see what is happening in Washington. Conventional wisdom, especially if you watch the mainstream media, is that the tariffs will lead to inflation. So we don't have enough data yet. Again, go back to my sports metaphor, but it seems very unclear to me that the tariffs, what the president is trying to do, especially if he is successful, maybe not in everything he wants to do, but at least in some of what he would like to do, will actually lead to inflation. I think this is another area where there's just alarming rhetoric. The sky is falling. It's a political commentary, not necessarily an economic one. It's fear mongering, but we really just don't see it in the data yet. Now, maybe we will later, but we don't see it in the data yet. What do you think about where we are with inflation?
I mean, it's sitting at 2.3, which is one of the lowest inflation rates we've had in a couple years. So going back to your sports analogy, none of the tariff rhetoric has hit or struck yet. So it's not included in that data. So we really need to wait and see how they actually take effect and how that's going to increase um, that inflation rate, if it increases it at all. So TBD.
Yeah, and as of this recording, the most recent inflation print that came out showed the tamest inflation since I believe 2021. So that was at the prior to that red hot inflation we saw. So it seems like inflation is very much under control. And again, I am certainly not in the camp that thinks that what the president is doing, whether you like it or not, is going to ignite inflation. I don't see that. I don't see that at all. We'll wait and see, though. I think that's sort of my expectation, but I'm open to the possibility I'm wrong. We just don't know how it's going to play out. But importantly, it's not in the data yet. I talked about the Fed, the Federal Reserve's position, which I think I disagree with. I want to get your opinion, Brad. Is the Fed is they like to say data dependent, which I think is a joke of a statement, but they're waiting to see what happens because they say they're not sure. The bias has been the expectation was that the Federal Reserve would be in interest rate cutting policy period during 2025, but that seems to have been pushed off. Maybe we'll see no rate cuts this year. Maybe we'll have to wait till next year, but they seem to be waiting, like all of us, to see what happens with this tariff chapter that the Trump administration kicked off. What do you think about where the Fed is and where their policy prescriptions are? Do you like what they're doing?
I mean, coming into the new year, we had projected potentially one, maybe two rate cuts coming in. Now, with the stock market decline in April, that's typically tied to a Fed cut, which didn't happen this time. So I think over the next 6 to 7 months, we're poised to get a rate cut, maybe two. But personally, I think that by keeping rates the way that they are right now is fine, but they have to set the timeline and the expectation that they are still in a cutting process throughout the rest of 2025. Whether it's once or twice, I don't think it matters. I think it's just has they just have to show the intention to decrease rates.
I think that's fair. And you influenced me a bit. I would prefer the Fed to be a little more. I think I do believe the Federal Reserve is political in nature more than it used to be. And I think, like lots of the administrative state and the powers that be, they generally dislike President Trump, oftentimes because he's not nice to them. But I think that Chairman Powell is overly cautious about this tariff thing and has largely bought into the sky is falling and something bad is going to happen camp. And he's just a little too biased negatively for my liking. And I think the bias should be that we're going to cut, that we don't see any inflation and we're not likely to see inflation. But I agree with you that just waiting to see is fine. It's only been a month or so, a little over that, since this whole chapter with the trade battle was kicked off. So I'm okay with them waiting, but I think that the Fed is, in their language, is more negative than is needed for the situation and the data. So we'll see what the Fed ends up doing, which brings us to the last of the five things. We've covered tariffs, the big, beautiful tax bill, the 10-year treasury, inflation, which is very tame. Let's talk about recession worries because that has been a topic that has really come into the fore over the last bunch of weeks. But it's changed a lot too in the last couple of weeks. What do you think about the fears of a recession this year?
Honestly, I think the fears of a recession are going to be are currently driven by 24-hour news media. I think that's why a lot of people are screaming about it. Now, was there legitimate fear when we saw such a big decline a month or so ago? Maybe. But at the same time, I think it's everything's so amplified so emotional. Do I think that we're at a risk for a recession? No, I don't necessarily think that. I think even a recession looks different than what it looked like 5 to 10 years ago. Even though the real definition has stayed the same, it seems like the goalposts on what one actually is keep getting moved around.
Yeah, at the beginning of this, when the markets really sold off and it was very jarring what the administration decided to do on tariffs, I thought that the risks of recession went up dramatically. But I think that that has also decreased quite a bit as things have moved on because there's some trade deals that have been announced, and the administration is hinting that there's some that are underway. There was a successful meeting with Secretary Treasury Bessent and his Chinese counterparts in Geneva recently. There's still a long way to go, but I think the fears of recession have gone down. Again, the difficult part, if you're listening to this, for people that are involved in the markets, professionals and investors alike, it's so difficult because so much of what you hear in the news and what people think are influenced by their political views. Show me somebody that didn't vote for Donald Trump, I'll probably show you somebody that's bearish. Somebody that voted for President Trump, I'll show you somebody that's probably pretty bullish. And in the Biden administration, that was flip-flopped. All the Republicans were bearish and all the Biden supporters were bullish. And I say all, it's not all, but you get the point. And so a lot of what we're dealing with has nothing to do with really corporate earnings or balance sheets or product innovation. We're not talking about AI and robotics and quantum computing. We're not talking about mergers and acquisitions. We're really talking about what the market is doing, largely based on what the politicians are doing, which really stinks because I didn't go into this business to be watching what the president or the Congress does. But that's really what's evolved in our industry. Now, I got a few years on you, Brett, but it wasn't always this way. This is really something that I think began during the Great Recession in 2008 and is really accelerated with Trump's arrival on the scene, but it absolutely stinks. How's that for a
Yeah,
speech?
yeah, that's it's a great soapbox speech. I really like it.
And with the recession at the beginning, when Trump made the announcement, J.P. Morgan, as an example, came out publicly and said that their forecast was a recession this year. And then just a few weeks later, about a month later, they came out and changed that they didn't think there was a recession. So I'm not trying to pick on J.P. Morgan. It's a great company, and they're most, if not all of them, are probably smarter than me. But that makes no sense to me. Just in a couple of weeks, you're going to change from a big call on we're going to have a recession to a big call on we're not going to have a recession in just a couple of weeks. It's just insanity. And it makes our lives difficult in one way, Brett, but not difficult in another way because we remain unemotional, keep an eye on the long term, stick to data and best practices and fundamentals, and not be too swayed on what happens on a daily or weekly basis. Not that we're not going to watch those things, but we're not going to act and get overly influenced by every little tiny thing that's said, either by the president or by other politicians, or even worse, by the talking heads in the media.
Yeah, and I'll just add one thing to that. So you were talking about some of the big institutions and kind of their uncertainty. So they've been throwing around price targets for the S&P 500 that are all over the place. So for instance, the S&P 500 right now is trading at about 58, 5,900 as of today. During the decline in April, it went down around the 5,200 mark, somewhere around there. Some of these price targets for 2025 range from 5,200 up to 6,000. Do you know, like that is a huge range. So it's pretty much throwing whatever they can at the wall and seeing what sticks. So it's such a big range that it just shows no one really knows, and no one's really able to stick their neck out there and make a concrete, solid prediction because they can't do it.
Very good. So just in summary and short, as we wrap up, Brett, Are you optimistic about the economy and the markets for the remainder of 2025? Are you neutral, let's wait and see? Or are you negative about what's going to unfold? What would be your posture at this moment?
I think I'm neutral going into the third quarter. See what happens with the tax bill, see how the tariffs land, if you will. And then I think if the tax bill's passed, tariffs land easily, I think it's going to be, we can look to an optimistic fourth quarter and a strong end to the year. I'm very optimistic by the speed of which the market declined and then rebounded. So, if anything, that gives me optimism. And I think once we get the tariffs and the tax bill figured out going into the third, fourth quarter, optimism's there.
Yeah, it sounds like I'm a touch more optimistic than you. I have confidence and faith that the Trump administration can engineer some positive results through all of this change and chaos. And I think part of that is Secretary of the Treasury Percent is the right man for the right job. He is incredible. And I'm generally a fan of President Trump. I don't love everything he does, quite the contrary. But I think that the key person in this is Scott Bessent. And that gives me maybe a little more optimism that you have, that there's some good deals to be had, some improvements to be made, and they'll unlock them. And that'll mean the second half of the year will be good, and makes me even optimistic as we think about 2026. Not that I want to rush 2024. It's already going fast enough. But thank you, everyone, for listening. Brett, thanks for kicking these issues around with me today. I'll be back with all of you on the next episode of the Simply Financial podcast very soon. Thanks for listening today.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues, or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.